before we get to Monday afternoon, what I want to do is take a look at the first higher high play. This is one of the, as I call them, the bonus setups. But I love this trade when it sets up. It doesn't always set up as often maybe as it sets up pretty frequently, but maybe not as often as the others. But I just love this because I feel like I'm getting in, right at the right spot, right at the low of the market as it's turned. Okay, so conceptually, here's what we're looking at. We're looking for a new swing high that breaks the downtrend, kind of breaks the back of the downtrend, if you will, and creates that first higher high. So we've got a low and a high and a lower low and a lower high and a lower low, right? And now suddenly a new high, a higher high. A higher high from this lower high. So B obviously is higher than A. Again, the idea of that pulse, drive up and through the last swing high, and then it comes back and it rests. Okay, we look for that weak pullback to enter. So that's conceptually how this works. And it makes sense if you think about it, because this is the first higher high ought to be starting a new trend. So it's not something that we want to be looking at in the middle of a trading range. We want to see a downtrend, and then that downtrend ends. So let's go back now to Monday afternoon. Here was the trade we took up here of the sweet spot, and we got out of it around in here somewhere. So all this stuff is going on, right? Going into the noon hour. And we're not in the market, and that's okay. We don't have to be in every little, as I say, wiggle and waggle of the market, You might be saying, well, gee, look, this is, a pullback in here, and then the price action is pretty negative, and so on and so forth. And yeah, it is, but it's not one of these trade setups. And I would just be sitting on my hands in here. In fact, I would be looking at this and saying, well, you know what? Supply is drying up in here. So we are likely to see a change occur, right, in this market. And look at what happens on the next push up. We have broken the downtrend line. This is the supply line of the downtrend. We've broken that. That's the first phase of this. We have pushed up and through the last swing high. This was a lower high in here. And we've driven up and through it and made a higher high. And now we want to see the weak pullback come in. And we do. We get that. Well, before I get to that, we do get that weak pullback. Notice the volume here. As we pull back here, it's certainly not anything to write home about here. If we look compared to this volume over here when we were in a similar area back in the morning, if we come back, traders always like to look at the hard right edge of the chart. I'm forever trying to get them to look left, to look backwards. And I don't know, maybe because everybody drives and they're looking down the road and they're thinking that is the right way. But really, you've got to be looking in your rear view mirror a lot of the times when you're trading to see what happened before. So we have high volume here. This is demand overcoming supply. And how do we know that? Well, we know that because the supply is dried up. That's 1. 2, the volume is strong. 3, we've broken the downtrend line. And 4, we've created a higher high. So this is like a no-brainer, right? This is a gimme kind of trade. And so you can take it on price action, which would be this bar right here. And another option if, this is a test of this. Let me tell you something about these trades, by the way. We will often see a deeper pullback than what might be normal in a normal trend. So for example, just looking at this chart here, we're in a trend now, right? We have a higher high, we have a higher low, We put in a higher high here. And so now look at the pullbacks in here. They're smaller. And that's typical in a trend once it gets going. But the first leg up, you can get either a deeper pullback, which this is a little bit deeper, or you get this kind of funky sort of oddball kind of pullback where you get some testing going on or back and forth. Sometimes it's a spring. That's kind of nice if that happens. Often, it's either a deeper pull, sometimes the pullback will come not all the way back down to the low, but come close to it, or it does something like this. So you got to be a little bit prepared for that. But just as we talked about with the sweet spot in the trend, you can do a trend line down and take the break of the trend. As the little green lines show, you can buy, stop a tick or two above the high of the last bar or the bar 2 bars back if you want. And again, the measured move or the trend channel gives you targets. They give you targets. But again, what we're really relying on in the sweet spot and in the first higher high trades are this pulse, rest, and pulse. And this is just a behavioral characteristic of the market that it does very frequently. I mean, you can see it here: pulse, rest, pulse, right? And this is how the markets work when they're not in congestion. And so we're trying to capitalize on that as much as we can. Where would the stop loss point? Well, you're going to put it underneath here somewhere, a couple of ticks below the low, the swing low. Let me see if there was anything else I wanted to say about this before we moved on. Well, so you see, we're not just looking at a trade setup. If X happens and Y happens, then we do this, right? If X happens and Y happens, then we do Z. That's not the Wyckoff method. What we're doing is we're building a story here. And just think this through, and think this through on all your trades. We're building a story of demand. And so part of demand, part of opening the door for the demand is no supply, right? Because when traders see that there's no supply, then buyers will step in. Part of it is breaking the back of the downtrend, actually over here, and then pushing up and creating more demand, a higher high than we had before, plus bigger volume. And then we're waiting for the weak pullback, the light volume pullback to occur to give us affirmation, if you will, that all of this is no supply in here. This is no supply. So we have no supply, demand over supply, and then no supply. And what we ought to get from that is another leg up. And that's what we're playing for. Okay? This is why this way of doing the discretionary trading works well, because we're piecing together all of these different things. We're not just looking at X plus Y equals Z, as you see in all the trading textbooks. This is the art of discretionary trading, is to put together, David Weiss would call this a Wyckoff story, and it's just piecing together. Tom Williams would have called it, when he was alive, he died recently, he called it the background conditions, that those are key. Those are going to tell you what's going to happen in the future. Because this stuff, he would often say, this stuff does not go away. And it's true. And so we want to piece that together to put together a high quality trade. That's what we're all about here. Some questions here. Does the sweet spot have to have a prior swing high? Yes. If you're trading to the upside, yes. You have to have a swing high and then a pullback and then a push. As I said, don't take them in the middle of a trading range. That's not what these trades are about. Josephine says, what is the volume indicator you are using? This is the Weiss wave. David Weiss came up with this after years of work. His name is Weiss. David. David is the guy who taught me this stuff. He's my mentor. He's a great trader and a great friend and a nice guy. This is called the Weiss wave. David Weiss's wave. It's based off of the Wyckoff wave. Wyckoff thought in terms of waves. So you see that the wave goes up here, right? And then it comes down, then it goes up a little bit, comes back down, and then continues on up. So what David's Weiss wave does is it aggregates the volume. So this is the volume on this wave. This is the volume down to here on this little red bar wave. This little blue is the little move up, and then the little red is the little move down. So you can see that this measures the, instead of looking at price bar volume or bar volume, this measures the wave. And you can see that this wave, even though it comes down to the low here, but it comes down basically to the low, that the volume on this wave is less than the volume on this wave. It's also a little bit smaller, but it's smaller volume, and so it's just an indication of no supply. And we like the Weiss wave on the intraday. Let's see. In downtrends, low volume is generally no supply, and uptrends, low volume is generally no demand. In the right areas, Spence, yes. In the right areas. In a downtrend, you want to see volume come into the downside, as it does here when the market moves down. When it stops coming into the downside, then there's, it indicates there's a problem with the market. Okay. On rallies in a downtrend, you don't want to see heavy volume. You want to see that volume be really light, like it is here. That signifies no demand, and the high volume on the downside, expanding volume on the downside, signifies supply overcoming demand or supply over demand. And you can see the change of behavior occurring right here on the first higher high. That's what the first higher high trade does. It captures the market's change of behavior. Now we're moving up, the wave up. This is a wave up. Let me do it this way. This will make it understandable for you. So here we have a down wave, a down wave, a down wave. And then here we have an up wave and an up wave. So the down waves here are larger than the up waves in the downtrend. We note that as the volume gets lower, that this down wave is smaller than the prior two down waves, certainly smaller than the prior down wave. Now we have an up wave. And that up wave is indeed bigger than the last down wave. That's a change in behavior. Plus, we can see that the volume has increased, which is also an indication of change of behavior. Okay? So that's one of the reasons why we like to use the Weiss wave. It measures the waves of the market. I should say this, that David's Weiss wave indicator also has, it would show you the swings coming down. Okay, it would plot these out for you, so you can coordinate the volume and the swings. I've been using it so long I can see the swings without the indicator, but the volume is really nice. Okay. If it didn't have strong demand on the first higher high wave up showing a clear change of behavior, let's say the volume was average, would you still be looking for the first higher high? Yes. If the price action was okay, was the flow showed strong up, and you can see the price action between this up wave here. This up wave is stronger than the last down wave. It's very choppy coming down, right? And it's nice moving up. So let's say that this up wave kind of got truncated here, and we didn't have, tremendously good high volume. If the price action is good if the demand line, if the supply line of the trend channel was broken, and we make the higher high, I'd be happy with it. The only way I wouldn't be too happy with it is if we had large volume coming down, and this wave wasn't, we didn't get shortening of the thrust in the wave here, and this volume had a lot of volume. This wave had a lot of volume, but not necessarily climactic volume. Then I don't know, because you could have that pull up and then up thrust. So we might not want to take it in that condition. We want to see a couple of things going on here besides just breaking the high here, the last swing high. Yeah, the up thrust and the downtrend. That's exactly right. What point setting are you using, please, on the Weiss wave? 3/4 of a point. Let's see, zigzag volume close to Weiss wave. Sierra Charts has zigzag. Probably, yeah. I don't know exactly how he coded it, but it probably is similar. Would you class the first higher high to be in the same vein as new momentum high? No, a new momentum high would have to be more, we'd have to see a bigger trading range. Like, for example, here we have a pretty good trading range, and you got a momentum low here. This is a new momentum low. This might, if you ran an oscillator against it, this might show a new momentum high, but I wouldn't characterize it that way because there hasn't been a lot of accumulation in here. So let's just do a quick recap here. These are good questions. Thanks for asking them. The background conditions are important. The downtrend has to end. We see the supply dries up. That was a dramatic example of the supply drying up. I didn't pick it because of that, but it just happened to be that way. You'll see it, though. You'll see I forget if we have an example, more common example maybe, where the Weiss wave peaks get smaller and smaller as we come down. Or sometimes we'll see shortening of the thrust. I'll explain that in a little bit in a future chart. But the selling will have dried up. The downtrend line breaks. Price advances above the last swing high. The demand is strong. Price action is always going to trump everything else, but I like it when I can see good volume coming in. That just gives me a warm feeling in my heart, And sometimes if I get in too early, which still occurs, I misread the price action and I get in a bar or two or three too early. If I've got that strong demand behind me, I'll sit through it. I won't be too worried about it. Now, somebody asked about the new momentum high. So if there has been a congestion area that breaks, a really well-defined congestion area that does break, then that would be kind of like a new momentum high. And then that would be a plus. You don't need to know about what new momentum highs are. Just know that that's a strong indication of demand coming in as well. So if you got a congestion area, trading range in other words, and that breaks, then you've got that's nice. That's a plus for the first higher high trade setup. And then we're looking after the first higher high, the weak reaction, price bars are overlapping, downflow is poor. We're not getting ease of movement or acceleration down. The volume is modest to light. And as I said, it can go deeper or give you one of these funky kind of pullbacks that you're sitting there saying, what the heck is going on here? But that's kind of typical in this trade. And the entry and exit, same as the sweet spot in a trend. All right. So that was just Monday of the S&Ps.